So SoFi looks like it's on the verge of cracking over the mid $8 range, and I want to break down, of course, the charts here in this video like we always do, and I want to go over an area of the business that some people might be overlooking. So we're going to break down a bunch. Guys, hit the like button, make sure to subscribe, and let's dive right into the video. And oh, by the way, make sure to check out the mailing list down below if you want me to send you my top 3 stocks for free, of course, every single Monday morning. That's linked down below. Make sure you guys sign up, and let's break into, or I keep saying that. I said that yesterday. I'm not sure why I'm saying that. Let's get into the video. That's more like it. Cheers, guys. Let's talk. So SoFi right now is up over 3% on the day, and we're at $8.37. And yesterday, I'm sure everybody knows, we got the 50 basis point rate cut from the Federal Reserve, and SoFi went bananas after that news. We were at $8 before the news, and then we got the news, and it shot all the way up to $8.50. That was about a 6% move, and then as the entire stock market pretty much sold off after, we got the news. I'm sure you guys saw we got a spike in the S&P, then we sold off. SoFi did the same thing. We hit 850, like I said. Then we dumped down to about 815 at close. And then this morning in the pre-market, we gained that entire gain back, right? Or the loss back, rather. We hit 850 at open, then we dumped back off, right? We got down to about 815 again, which is where we closed at yesterday, and now we're pushing back to 850. So talk about the roller coaster ride here for SoFi, but ultimately it looks like we're going to break out of the mid 8s, and it's more evident the more you pull back the layers here. On the 5-day, we're obviously uptrending. No doubt about it. On the 10-day chart, we're breaking out. We have a golden cross. We're above the moving averages. And on the 4-hour, on the 20-day rather, you can now see we're taking out the highs from the end of August, which I think we covered in my most recent SoFi update. And here on the 4-hour time frame, now we're starting to really break out. If I draw this line out, you can see we're taking out 825, 830, which is huge with the move that we saw earlier today to 850. And now the next gap to fill is at $9 to about $9.15. If I draw this line out, or this circle out rather, we can see that's a wide open gap, right? And then if that were to break, $10 could be right around the corner, no doubt about it. So with rates being cut, guys, what we're seeing is mortgage demand, I think I was reading this yesterday, is the highest it's been in about 2 years, maybe even longer than that. And of course, SoFi does give out mortgages, right? They have personal loans, student loans, and again, mortgages. So let me actually come over here, guys, and show you what people might be overlooking when it comes to this company, right? So overall, a little fact right here. Revenue grew for SoFi by 34% in 2023. Let me actually zoom in a bit here so we can see this a bit better. 34% in 2023, but the company's guidance for 2024 shows a bit of a slower revenue growth rate of 17 to 19%. I feel like that could be in the 20% range. We'll see. Of course, it's not always 100% accurate in terms of guidance, but that's a more conservative outlook. As you guys know, Anthony Noto has been running the company very conservatively throughout this year, right? And I do think things will start picking up in 25, in 2026, right? And if we come down here a little bit more, one key area of excitement in SoFi's business is, well, their mortgage origination segment, which is expected to benefit from falling interest rates and could lower acquisition costs in line with competitors like Rocket companies, to name a few. And additionally, SoFi's innovative approach to IPO participation for retail investors could prove timely as capital markets seem poised for potential IPO wave. We'll see how that plays out. Coming down here a little bit more, SoFi's management is another strong point for the company, with CEO Anthony Noto executing effectively and purchasing shares, aggressively signaling confidence in the company's future, which we've seen. But again, the main thing I want to focus on here is the mortgage origination segment, because what's going on here, guys? When rates get cut, of course, mortgages kind of price it in before we get the rate cut. So I think we're at, 6.2%? I was reading for a 30-year right now on average, right? So that's coming down. I forget where the peak was, whenever that was, recently, obviously. And as rates come down, mortgage rates, more people are inclined to buy homes, right? I mean, you guys saw that stat, right? A $300,000 house in 2019 at or 2020 at 0%, or not 0%, but at a 2% mortgage. You pay, let's say, for example, and I'm spitballing numbers here, guys, but $1,500 a month at 2% mortgage. Then at a 7-8% mortgage, it was like $2,500 or $3,000 a month, whatever it may be, for that same value house. I mean, you guys have seen examples like this time and time again over the last couple of years. The fact that mortgage rates are coming down, that makes a serious impact on buyers going in and buying homes, even though the prices of homes aren't necessarily cheaper. You know, they're still very expensive across the U.S. at least. I'm not sure if you're watching this in other countries, but what it comes down to is more people are looking to buy homes now, that mortgage rates are coming down, and, well, they might use SoFi for their mortgage, right, to get a mortgage for these homes. So I think this segment in the business, obviously personal loans and student loans are big, but for the company, that is. But I think this is going to be a big piece that I don't know if people are underlooking, or maybe they're overlooking it, whatever. I don't know. Maybe they're all fully aware. I'm sure a lot of people are aware of this, but I'm not sure if the stock is fully pricing it in. We'll see. Maybe they don't get a huge surge in demand for their mortgages. We'll see. But it's definitely something worth monitoring here over the next couple of quarters, as we are expected to get even more rate cuts. I believe we are expected to get another 50 basis points by the end of this year. That might be in two 25 basis point chunks. We'll see if it's more than that. We'll see how it plays out. But overall, clearly, SoFi stock is liking the rate cuts. We're up around 3% right now, pushing the mid-8s, and it's looking better and better on the charts as time goes on here, guys. And I'm long. You guys know that. I own the stock. I've owned it for about a year, I think a little less than a year, and my average cost is right around $6.80. I'm up percentage-wise now roughly, let's see here, about 23 to 24%. Not too bad for owning it less than a year. And I think ultimately this stock will be, at least in my opinion, a $10, $12, $15 stock not too far in the future, especially a $10 stock, maybe a $12, $15 stock in a year or two. That's where it could be headed. I could be wrong. Please do your own research. I'm not a financial advisor, but that's a quick breakdown on some thoughts here when it comes to SoFi. What do you think? Let me know in the comments. Do you own the stock? Are you buying it? Make sure to hit the like button and to subscribe here on YouTube, and get up to 15 stocks for a Moo with at least a $100 deposit. Use that link down below, or go to stocksurfest.com/Moo. It's a limited time deal, guys, and your uninvested cash will earn up to 8.1% APY, which, guys, that's a no-brainer. So again, use that link or go to stocksurfest.com/Moo, and I'll catch you in the next video. Peace out.